Thanks very much, Nzinga. Well, the all-share index and European bourses are currently trading in positive territory. They were weaker at the start of the session. However, mining counters on the local exchange have been in positive territory. That might have something to do with the fact that the dollar has weakened somewhat, and that's usually positive for commodities which are denominated in US dollars. So that's a good point. We do see that even though it has weakened a tad, oil prices are still above, elevated at that $60 plus level. So it's still firm there, and this is largely due to OPEC's actions and a feeling in the market that indeed the market's becoming more balanced, and the fact that traders or hedge funds have decided to invest on a long-term basis in oil futures, and therefore that has kept prices elevated. Although if people decide to think differently and they decide to reverse those long positions, we could see a fall in the oil price there. The local currency did make slight gains at the beginning of the session, but it's since lost ground even further. Not doing very well at all. We see it at around 1867 against the British pound, and it's well over 14 against the US dollar. And we do have some data that's come out today. We've had the unemployment figure for Q3 come out. It's at the same level, 27.7%. While it hasn't moved, it's still a very bad number. That's an unemployment level that we last saw in 2008, somewhere there. And also we have some trade data coming out later, which could be Rand positive. The market expecting that that number will see a surplus of 10 billion Rand as opposed to 5.6 billion Rand or 5.9 billion Rand for August. Let's take a look at the indicators. Well, I'm joined by Travis Robson. He's from IG South Africa. Thanks for joining us, sir.
Thank you.
Good stuff. Now, we see that the local and European markets were subdued earlier, but appear to have turned up. What do you see as some of the drivers spurring markets today?
Yeah, I think the markets, we are starting to see a bit of profit taking. We saw a massive move in the Rand last week on Gagaba's beach, and that obviously pushed the Rand hedge stocks. So there's been a bit of profit taking on some of the Rand hedges. So the market is moving on some of those counters. We saw financial sectors also pulling back a little bit, industrial sectors pulling back. I think that has a lot to do with the Rand. So we've seen the Rand firming against the US dollar. More back on what's happening in the US dollar than anything with, corporate tax discussions there. European markets a little bit firmer. Our markets could be tracking that a little bit with our European counters. But in all, a very subdued day on the market.
And in terms of the US, those tax cuts, there's now talk of maybe a gradual phasing in of those tax cuts. Does it really make a difference? I mean, the main thing is that they're going to get tax cuts. Yeah,
just an influence on when they're going to gradually scale it in, the amount they're going to scale it in by. So these are all factors that investors will be wanting to know. The US market has pushed incredibly hard. We've had good earnings, especially out of the banking stocks. So there is a bit of profit taking happening in the US markets from inflated prices. We're also still milling over the possibility of interest rate hike happening by the Fed, and that is looking like almost 89% chance of that happening by the time we get to the end of the year. So all these factors will be continuously playing. We've also had some string of economic data coming out, which has missed expectations. So these will also be factoring in the market. So all in all, I think it's just a bit of a subdued data on the corporate tax, as well as some of the earnings coming out from some of the bigger heavyweights in the US.
Now, we know that global markets have been keenly watching what's going to come out of monetary policy in the key central banks. The Bank of Japan pretty much kept policy unchanged, which means continued stimulus. And you say we're awaiting what the US Fed will do. They come out with their pronouncement tomorrow. And then, of course, the Bank of England this Thursday is also going to make their pronouncement, but they're in a bit of a tricky situation, aren't they? Because inflation keeps on pacing ahead, but they have a lot of threats in the way of growth there. So do you think that we're going to see them raise interest rates in light of that?
We've seen good growth numbers coming from the UK, albeit very low, but obviously with Brexit and everything on, their inflation target is much different to South Africa. So we sit between 3 to 6%. They sit just below 3%. So they're seeing it ratchet above 3%. In order to curb that, they need to offer some sort of interest rate hike. The problem with offering an interest rate hike is you're going to stifle consumer spend, which will affect the retailers and the banks and other institutions. So it's a bit of a push-pull factor between what you would do fiscal-wise and what you would do on the monetary. Obviously, if they need to curb inflation, they would look at the interest rate hike. More than likely, we might see an interest rate hike. However, the economic numbers haven't been too bad to warrant that. So a far cry from what we see in South Africa. So it's just about pulling those levers to help curb, like you say, that inflation.
Indeed. Locally, we do have some push-pull factors when it comes to the rand. On the one hand, the unemployment number, 27.7% for Q3. Not great, not impressive at all. And then later on, we're expecting some positive trade data where we might see a surplus. How do you see both of those data contributing to where the rand will be today?
I think it's very important we look at this unemployment rate. Yes, it's 27.7%, which is the same as Q2. However, that is representative of the number of people actively looking for jobs. There's a higher number that are actually stop looking for jobs within that. The reason why the economy will look closely to that means there's a high proportion of people not earning salaries and therefore not contributing tax to the government. Remember last week we saw the government a massive tax shortfall from their forecasted numbers. They're also revising down economic growth, to 0.7%. Therefore, the implications are even further people unable to get employed. So these numbers are very, very serious. We're at an all-time high continuously since 2000 levels. It's a massive worry. But the key to these numbers and why the guys are looking at them seriously is because the number of people that are out of that job searching market has actually increased, even though it's the same as 27.7. Okay. Going to what you talked about on the actual rand, yes, good data coming out of the economy will be good for us because it might stifle the credit rating agencies from downgrading us. However, the credit rating have disclosed that it's very linked to governments using capital to pay SOEs, which was debated through last week. So good data is good. However, the monetary policy and how they handle the money supply going into state enterprises will be key for the possibility of a rating downgrade.
All right. Well, thank you very much for your insights, Travis.